Klime POPOSKI, who formerly worked for a number of years as head of the supervision authority in North Macedonia. Now is professor of the St. Kliment Ohridski University in his country. He is also the CEO of the local VIG subsidiary Winner. And more than that, he is a very active person and has started an association of insurance researchers in the area, people coming from the academic university in the region, putting together their knowledge so that they can identify trends and changes and, well, recommendation, what is needed for the development of the insurance market. And this is the point I would like to start our conversation, because you have seen the evolution of many markets in the Western Balkan region in particular. And in many respects, Moldova is a market that it's similar to them in size, in level of development maybe. How would you appreciate, from what you have read, seen, discussed about the insurance market in Moldova, about its level of development? How do you appreciate it in comparison with the Adriatic regions, let's say?
First of all, good morning to everyone. It's a great pleasure to be with you today. Thanks for National Insurance Bureau of Moldova for this kind invitation, and thanks to EERIA that again they organized this traditional conference, in which I took part even in some of the past conferences before the COVID time. So my first thought will be, if you compare Moldova with other non-EU countries, but most focus on the Western Balkan countries. Western Balkan countries are 6 countries: Serbia, Bosnia and Herzegovina, Montenegro, Macedonia, of course, Albania and Kosovo. I would say that Moldova, with the penetration level, which is below 1%, with density rate, which is below 50 euro per capita, it's less developed comparing to other countries. However, always there is a saying, and research also confirmed that this low penetration rate means huge potential. But always we are repeating this every year. There is a huge potential, there is a huge potential. So I think now Moldova, it's on the good track, having in mind this turning point from the political point of view, which was also turning point on the Western Balkan countries. When the Western Balkan countries, they have a clear objective to join the European Union. When some of the countries received the candidate status, and some of the countries, they started with accession process, that was the turning point of all economic area to develop, including the insurance sector. Therefore, your current status, you're like in the win position with these geostrategic political developments, especially in reflection with the Ukrainian war. You receive candidate status. Hopefully soon, maybe you will start with the negotiation process, and that will bring a lot of novelty, and that will bring insurance market on the very large scale that was in the past. It's not only about regulation, but it's also about the know-how, it's about maybe interest of other European Union insurance groups. They want to enter the market. It's about the competition. So what also I like to emphasize, that having in mind the level of the economic development, your GDP per capita, it's not far from what we have on our peer countries, from Western Balkan countries. The unemployment rate, it's one of the lowest. I'm surprised that unemployment rate is below 3%. So that means, from economic point of view, you are on the right track. That also has a reflection in the insurance market development. But there are many things that should be done. I heard that there were some thinking in the previous panel, which line of business has the most potential? I would say that life insurance, that you have only one company that offers life insurance, something that will bring a new interest on developing life insurance. Because the mortality gap and the health protection gap and the pension gap, it's so huge that this gap actually will motivate the insurance industry to fill this gap. Then someone mentioned liability. I would say, I checked, on professional liability insurance, you have the less developed mandatory form of professional liability. In many countries, you have so many mandatory professional liability insurance that you cannot imagine that almost all professions, they have mandatory form. I found one report from Aon, which saying that in the developed countries, over 60% of the insurance, it's a non-life business. It's a mandatory or contractual mandatory, which means self-mandatory form. Insurance, it's a business. It's not that it's buying, but it's selling. So that's why you should think with the politicians, of course, with the government, how to impose as much as possible professional liability insurance. Personally, I was involved in different projects in different countries, in medical malpractice, mandatory insurance, in construction, architectural, professional liability insurance. So I run some project with the World Bank. So this is very important.
Remaining close to the business lines, we cannot ignore maybe the main business lines in all these smaller markets, which is by default motor insurance and in particular MTPL. It's the business line that generates a lot of cash flow, but it's also the business line that generates a lot of problems and challenges. From your experience, from what you have seen in the region, what would you say would be the best approach to developing this line so that avoid the big problems?
MTPL is the most important line of business in all non-EU countries. The lessons learned from the experience is that you must have clear objective what all these reforms of the MTPL will bring to which point. And always my approach as a former supervisor is to have three important targets. First, of course, consumer protection and greater financial stability of the insurance companies related with the MTPL business. Second, risk-based pricing. Price on MTPL cannot be a political instrument that the government would like to buy election, that the government would like to use as an instrument how to deal with to turn out to be popular. So the price on MTPL must be risk-based driven. And third, related with the green card, your objective, because of the freedom of traveling, because of the freedom of moving of people, you must have objective on signing the multilateral agreement in the Council of Bureau. So you're happy that today with us it's Sandra Schwarz. Maybe she will mention about this. And in order to have this third clear objective, that means you must have single MTPL policy which include the risk on the third-party liability abroad. So those three are the most important aspects. That is my advice that you must put on the very high agenda.
Well, then remaining in the advice area and close to the business lines again, we also cannot skip discussing about the insurance gap in property insurance. Well, we are all facing, the entire world, the impact of climate change. We are seeing extreme weather phenomena that were in the past, I don't know, intensities considered 1 to 100 years that now are becoming 1 to 10 years. So more frequent phenomena, more severe, and we have to deal with that in the conditions where in many countries of the region we are referring to, the coverage is something like 1 in 10 houses insured. What would be a way of trying to close this gap?
Okay, protection gap and property insurance is very important. For Moldova, if we took into consideration the importance of agriculture sector, and without existing agriculture insurance, in Extreme report, I found that this year many companies, they cancel agriculture contract because they didn't receive on time the subsidies from the government. So what will be my message here? First, I will start for what we did in Macedonia 10 years ago. It's good that some of the power and supervision was shifted to the central bank. Why I am saying this? So this is a message for the wise governor. In Macedonia, 10 years ago, because of the expansion of mortgages of the banks, because of the lending of the banks to the corporate clients, part of the risk management of the bank was to have mandatory property insurance for each loan. That will open the floor for strengthening the bank insurance as a channel, which is also very important distribution channel, but also for insurance company to offer property insurance for the bank clients. Second, in the agriculture, but also in the other net cat risk, there is no magic solution. Insurance company cannot solve this gap and the problem on a standalone base. The lessons learned from everywhere is public-private partnership schemes. And these kind of schemes exist. Romania, for example, PIPE, I believe that most of you are familiar. Then in Turkey, there is two pools that exist. One is for earthquake, the other one is for agriculture. For agriculture, only public-private partnership schemes can exist. Otherwise, it's not possible to find the single solution. So that means you must have strong cooperation between the government stakeholders, between the insurance stakeholders, and of course the two supervisory authorities. Here I would like to address one important message, that also you have very historical based on how the supervisory and regulatory power in insurance is divided. You have Twin Peaks model. We heard that for prudential supervision, you have the central bank. For market conduct or consumer protection, you have National Financial Commission. This Twin Peak model exists in also some of the countries, but most in the developed countries. That could be a very good approach, that how you will build the trust. Because for the insurance, if you want to develop, the trust must exist. The trust amongst the citizens, among the corporate clients. And with these two models, the trust will be built. But in order to be built, my message will be to have skilled employees. The research findings said that you need to invest minimum 5 to 7 years in a good supervisor. So in order to have a good supervisor, skilled supervisor, you need a period of 5 to 7 years to invest. To invest, meaning continuing training, continuing education. This is the most important. So let's come to your question. Protection gap in property. as I said, bank actions, bank insurance to develop, public-private partnership schemes, and here also I would like to emphasize the role of the international insurance brokers. Because the international insurance brokers, like Marsh, Aon, they have know-how how to deal with the complex risks. And they can bring a novelty to the local insurance companies. Also, the good thing when I see in the market, I read the report from the central bank, the financial stability report, and I found in terms of market competition, you have many advantages comparing to other countries because this Herfintel index, who measure market concentration, is very favorable. That means you have healthy competition. There is no company who dominates on the market. This is another good signal for future potential. Because if you have players who dominate on the market, like one or two companies, this is not a healthy competition.
Okay, I think we have reached the closing of our discussion. We have also taken already 7 minutes from the coffee break, but I think it was interesting enough to justify this. I would end with a final question for you. We have started speaking about starting from the EU accession perspective and what implies this. A lot of benefits, but also a lot of pressure on aligning with the EU standards, with a lot of legislation, directives to implement and so on and so forth. It is not easy, especially considering the market, it's not quite mature. What would be the essential recommendation in approaching this entire process?
Okay, we heard today from the Vice Governor very clear message that Solvency II is one of the priority. We heard from presentation from our colleague from Czech, Miroslav, about the Pillar 2, the importance of Pillar 2 of Solvency II. Now I would like to address a few messages based on my very close tie relation with the father of Solvency II, Professor Karel van Hulen. He wrote a book, Solvency II, It's Good for You. I would recommend for all of you to have this book because it's the best lessons that you can learn for Solvency II. However, his message is always for those countries who are not developed, who are not yet part of the European Union. Be careful and apply the principle of proportionality. Not all regulation should be implemented on the same manner. Now let me share with you what is the policy and strategy of my region, of the Western Balkans, in terms of Solvency II implementation. You know that Solvency II, they have 3 pillars. Pillar 1, which is actually the heart of the Solvency II, about solvency calculation, cannot be in place before you join the European Union. Why? Because the standard formula need input to calculate the capital requirements. The input is free risk interest rate. This free risk interest rate is only provided by EIOPA, and we are not member of EIOPA. In order to be member of EIOPA, you must be EU member. So this is a challenge. That's why all the countries who are in the accession process or who has candidate status or who adopt the Solvency II roadmap, they are focused on Pillar 2, which is corporate governance. And thanks to Miroslav, he addressed the way how should be this implemented, the risk management, own risk assessment, corporate governance. It's very, very important. The third pillar, it's about the reporting and disclosure. Well, disclosure in terms of Solvency II is something that will not work before you're not full implemented the pillar 1. But reporting is important. But my message, especially for the central bank, will be to have state-of-the-art data collection and producing early warning system for risk management purpose to assess, to evaluate the level of exposure of insurance companies. Now, you are in the very good timing to start to prepare on the long run for Solvency II implementation. But what you need actuaries. Without actuaries, you cannot move it, you cannot take a step forward. As far as I heard from my friends from Moldova, you have few actuaries, so that means less than 10. My message will be, as soon as possible, to start with organizing some professional education for actuaries. This is the most important. Without actuaries, you cannot go further. Also, I would like to mention here, and today with us is also my colleague from Macedonia, Svetlana, who is the president of Macedonia Actuarial Association. Both of us, we are the founder members of the international organization named Actuary du Monde, Actuary of the World. It's a voluntary organization who supports and who develop the capacity building of the local actuarial association. They provide free of charge training, education. So just please feel free to contact us and we can organize kind of workshops, training, not only for these few actuaries, but also for those who would like to enroll in the actual education. But you must, as soon as possible, take this. Second, for Solvency II, you need also investing in a complex software solution. That is something that the companies must think about that. In this market, you have 10 companies. Only 2 companies are part of the EU insurance group. The other rest, 8 companies, are not part. That will be a huge challenge because VIG and Grave, they has a lot of experience in Solvency II. So my message to the other companies is to think even now and to invest in people, in equipment, in software for better preparation. Doesn't matter if Solvency II will come 10 years from now, but this is the right moment. Because the Solvency II directive was adopted in 2009. The Solvency II early discussion started in 2005, and the starting date of Solvency II implementation in European Union was 1st of January 2016. So that means they need 9 years to prepare. So from today's perspective, also you will need 10 years to be ready for this. And it's a right momentum to think and to invest in all these aspects that I addressed.
Thank you, Kliment. It seems to me that more than a solution, what we are searching now, it's more about a revolution that is coming step by step. And what it's waiting us, it's a very interesting decade, full of changes, full of novelties. Probably in 2033, who will be present at the annual insurance conference of Moldova will talk about much more different things than today. Thank you very much.
Aplauze pentru